So, you want to learn bookkeeping, by Dave Marshall. http://www.dwmbeancounter.com. Business transactions. In this lesson and future lessons we are going to stray away from analyzing and recording transactions using the big accounts and start using the detail accounts to record and analyze our business transactions. We took a step in this direction by setting up a simple chart of accounts for ABC Mowing. Source documents. The original sources of information that provide documentation, proof that a transaction has occurred are sales invoices, tickets, invoices from suppliers, contracts, checks written and checks received, promissory notes, and various other types of business documents. These documents provide us with the information needed to record our financial transactions in our bookkeeping records. Typical examples of source documents: invoice, a business document showing the names and addresses of the buyer and the seller, the date and terms of the sale, the description, quantity, unit price, and total price of goods purchased or sold and the method of delivery. Selling business refers to this document as a sales invoice. Buying business refers to this document as a supplier invoice. Receiving report, a document originated by the buying business listing the quantities and condition of the goods and/or services received from a supplier. Sales order, a documented originated by the seller listing the goods and/or services ordered by a customer and other information such as prices and delivery dates. Purchase order, a document originated by the purchaser buyer requesting the supplier to ship goods or perform services. Check book, formal record of all checks written, deposits, bank charges, and miscellaneous charges and credits. Check, a written order directing a bank to pay cash from the account of the writer drawer of the check. Typical types of business transactions and the debits and credits and accounts used to record them. In a typical business transaction we get something and we give up something. Transaction types. Sale, sell goods and/or services. Cash sale, customer pays at the time of sale. The business gets cash or a check from their customer and gives up a product or service to their customer. Accounts used: debit, cash. Credit, sales. Transaction types. On account, sale, business allows the customer time to pay. The business gets a promise to pay from their customer and gives up a product or service to their customer. Accounts used: debit, accounts receivable. Credit, sales. Transaction types. Purchase, goods and/or services. Cash purchase, business pays the supplier at the time of purchase. The business gets a product or service from their supplier and gives up cash or a check to their supplier. Accounts used: debit, expense or inventory account. Credit, cash. Transaction types. On account, purchase, supplier allows the business time to pay. The business gets a product or service from a supplier and gives up a promise to pay to their supplier. Accounts used: debit, expense or inventory account. Credit, accounts payable. Transaction types. Pay, supplier charge, purchases, pay suppliers for products and/or services that we promised to pay for later, charge. The business gets the amount of their promise to pay the supplier reduced and gives up cash or a check. Accounts used: debit, accounts payable. Credit, cash. Transaction types. Receive, customer charge payments, receive payments from a customer that promised to pay us later, charge sale. The business gets cash or a check from their customer and gives up, reduces the amount of their customer's promise to pay. Accounts used: debit, cash. Credit, accounts receivable. Transaction types. Borrow money, loans, receive loan from a creditor with payment terms. The business gets cash or equipment and gives up a promise to pay. Accounts used: debit, cash or equipment. Credit, note payable. Transaction types. Repay, a loan, business makes payments to creditor. The business gets the amount of their promise to pay reduced and gives up cash or a check. Accounts used: debit, note payable. Credit, cash. Transaction types. Draw, payments made to owners. The business gets the owner's claim to the business assets reduced and gives up cash or a check. Accounts used: debit, owner's draw. Credit, cash. Transaction types. Payroll, not covered in this tutorial. The business gets services from their employees and gives up a check. Accounts used: debit, salary and wages expense. Credit, cash. We used our ABC Mowing transactions and identified the source document, type of transaction, accounts affected, and determined and explained the debits and credits needed to properly record and post to our general ledger (T) accounts. Special thanks to Ron Leishman for the cartoons. http://www.tunaday.com